Hi, I'm Dave,
And I'm Paul.
and we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in and the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go. All right, we're back. Paul, what's going on?
Oh, it's a lovely Tuesday here. The humidity's gone. We got, a couple weeks ago, I guess we had like a microburst come through here. It was actually pretty crazy weather, and we had similar last night, but no damage luckily around where I am. So, How about you? What's up?
Beautiful day. So it's although I feel like summer's winding down, it's winding down quickly. Kids are going back to school soon. So it's kind of sad. Like I really enjoyed the summer. Like the mornings are super chill because you don't got to get anybody rushed out the door. Nobody's fighting or screaming, and kids just fend for themselves, and they stay up late, and I don't care. So
Yeah, our kids go to camp on Fort Belvoir, so it's still the same for me. I get them up at 6:30 and out the door by 7:30.
Oh, really?
Yeah. But starting next summer, that'll be ending. I won't have to pay anyone else to watch my children anymore.
That's right, man. You'll be Mr. Mom.
Yeah.
Yeah, that'll be cool.
Mm-hmm.
So it was cool. I'm over here at the model house again across the street, so I can get some quiet to record. And I came over here, and there was an older gentleman in here, and he was like, "Yeah, I used to own all this land. It was just farmland, and I just came back to check it out." And he was wearing a hat that had a B-52 on it. So I asked him, I was like, "Did you fly the Buff?" He said, "Yep, flew the Buff from like 67 to 71 or something like that." So, Vietnam era Buff driver. So so that's cool. Would have liked to talk to him longer. We didn't have time, but just pretty funny to run into another Air Force pilot randomly in a model house.
Yeah, and we have a current B-52 client pilot.
That's right. I mean, that thing is still kicking. I think it was commissioned in the 50s, and it'll probably go another 20 years, maybe another. I mean, you could get multiple generations of the same family flying that jet.
Yeah, I think they're on like generation 3 now, basically.
At least.
People flying the thing, right?
Yeah. No,
so
probably,
if you flew it in the 50s.
Like Gen 4.
Yeah, maybe in the fourth generation now. Yeah.
Yeah. So
crazy.
Really cool. But man, just finishing up the summer. And I guess when the kids go back to school, it'd be nice. Got a solid 7 hours or so at home of silence. Really not get some work done finally, instead of not, feel like I'm not able to get anything done all summer, but still a productive summer.
Yeah, no, absolutely. And so anyway, we're going to talk about pilots today, aren't we?
Yeah. You can always tell a pilot because he'll let you know, right? How's that go? Like, hey, a fighter pilot walks into the bar. How do I know? Because he told me.
That's right. We have in the Army, it's like the joke is about Apache guys. How do you know an Apache pilot? Oh, they'll tell you.
They'll tell you. Yeah. Like what Dale says that about me. He's like, "Oh, he's a pretty good guy. Just ask him. He'll tell you."
Yeah.
So, this is a fun topic because, it's dear to our hearts. And we got a lot of clients who are pilots, whether they were military pilots or not, but most of them are now commercial airline pilots. So, we'll use some analogies in this episode, but they're going to pertain to everybody. So, listen up, because this is, it's all straight out of Nelson's book, really. What are we looking at? Page 17 and 18?
It's in the problem chapter, I believe, isn't it?
Yep,
at least
the problem
it is on the audiobook.
Yep, the problem. So page 17, 18, you can follow along, and we'll just kind of go a little further on that. But man, after talking to pilots, and they have a lot, kind of the same mindset as business owners, I think. But two things they're really, really big on is risk and control.
Yeah.
And I remember that from flying for the airlines. what do you get? You basically get paid to manage risk. That's what you do as a pilot. You manage risk. Like every minute of the flight, you're making decisions on how to get from point A to point B safely, and ideally on time, but first and foremost safely. That and then control. So you become a pilot because you like the feeling of control in the first place, right? You want to be the one in control. If you're the one just sitting there with your hands in your laps and you're the one talking on the radio, sometimes you're like, I wish I was the one in control right now flying. So yeah, I think those are two big key aspects that we can really hone in on in this discussion. So I know we got a few things to talk about, but why don't you kind of talk about the problem that Nelson describes in this chapter?
Yeah. So if everyone, rereads the problem part in Becoming Your Own Banker starting on page 17, Nelson basically sums it up as that we're all fighting a financial headwind. And he uses like 100 miles an hour and then, a few hundred knot headwind, right? So we're all fighting this. If we do things the conventional way, right? We borrow money to buy cars. We borrow money to buy houses. We borrow money to finance college. We're borrowing money from somebody else's bank our entire lives. And it ends up being, for the average man, about 34.5 cents out of every disposable dollar is spent on finance charges to somebody else's banking system. So the lesson is, what if we could control that function and create a perpetual financial tailwind, right? He also brings up how, guys, we're just chit-chatting and, I'm saving 10% and investing 10, I'm focused on really getting a good rate of return on that 10%.
Mm-hmm.
But I'm ignoring the 34.5% that I just mentioned.
That's going out the door. Yep.
It's going out the door forever and it's gone. And the opportunity cost in that is whatever. Let's say it's 12% a year. It's a lot. So anyway, that's kind of the gist of the problem, is not controlling the banking function and bleeding interest to other people's banking systems.
Yeah. And the difference between a headwind and a tailwind. So imagine you've got a 100 knot headwind. So for those, I think that's pretty common term. Most people understand, but a headwind means it's coming at you from the front, right? Not to your back, but to the front of you, your head versus tail. So it's pushing you backwards. So if you had a 100 knot headwind, what's the difference between a 100 knot headwind and a 100 knot tailwind? It's not 100 knots.
No, it's 200.
It's 200 knots, right?
Yeah.
So you could go 200 knots faster with a 100 knot tailwind versus a 100 knot headwind. And that's the way, what infinite banking really does, that we've actually seen. I mean, how much different is your financial picture now than when you started infinite banking? And when you look back on that, it's not just the fact that, I've got this policy and I'm putting my capital there and saving it. No, that's great. But we've actually seized on opportunities because we had capital. And now we've been able to take that headwind, completely change our environment and shift it 180 degrees and create a tailwind out of it that every single year gets stronger and stronger.
Yeah, no, that's right. And I like how Nelson puts it and you mentioned control, right? And controlling the environment in which you fly. And he's talking about like high pressure systems and, it's up ahead of you and you get that, I think he said 200 or 245 knot headwind and you're trying to fly from Birmingham to Chicago, but you're headed toward Miami. And if you just land your plane as soon as possible, get out of that environment and then wait, and that system will move over you. And now you have no wind at all. So now you're moving 100 knots in the right direction. But if you wait even longer, and again, every time I read this book, I'm realizing more and more of what he's actually really trying to say, even though I think I have the highest level of understanding of what Nelson thought. Wait even longer, and now that system's going to get behind me, and it's going to start pushing me in the direction of which I'm going. And then he says, of course, now you're going in the right direction twice as fast.
Right. Yep. So let's talk about the headwind a little bit. Obviously, there's the headwind, like you mentioned, in the financial world that we live in, right? The interest we're paying to somebody else, that opportunity costs we're giving up. The 34.5 cents of every dollar going out the door to some institution to finance our lives. There's also a headwind when you start a policy, right? The policy starts, you're kind of moving backwards. You got to move, 2 steps back to eventually move 3 steps forward. But you have a headwind at the beginning. And just like you said, over time, that headwind, it kind of like shifts a few degrees every year and then big chunks of degrees. And finally, it's at your back. But once it gets to your back, it's there permanently.
Yeah, no, it's a great point. We have some startup costs, right?
Yep.
We have to get up to altitude to really catch those really prevalent tailwinds, right? At 35,000 feet, there's some serious tailwinds up there. It's also very cold.
Yeah.
I remember, for us helicopter guys, I had a 30 knot tailwind flying from Fort Carson, which is Colorado Springs, right, to Fort Hood, and I only had to make one gas stop. I had a radar Apache, which is just like a big piece of drag that sits on top of the damn thing, and still one fuel stop. Stopped in Amarillo for gas and made it all the way back to Fort Hood. But anyway, you've mentioned that yes, there's that time just to get going. But this is a business, and it's a business that's guaranteed to succeed, right? It's not like in the next chapter where he's talking about how you would start a bank and get a charter and get capital and go through all these regulations and stuff, right? This is a much simpler way to create a banking system.
Yep, absolutely. So yeah, the startup costs are like climbing up to altitude. Yeah, you're going to burn a lot more fuel getting up there. And then once you get up there, it's kind of like driving a car too, getting up to 70 miles an hour. And then, it takes how many horsepower? And then once you get up to 70, to maintain that only takes, a fraction of the horsepower.
That's right.
To maintain, right? And then if you're going downhill, like, a flight, you're up at 35,000 feet, now you're descending to come into land, like you got the gas back and you're still moving forward because you're letting the environment help you out in that situation.
Yeah. And I've heard, I think we've said it, but I kind of stole this from Ryan in that if you took 2 people, the guy not doing IBC is going to be ahead at the beginning.
Yeah.
But after a period of time, once we're up to altitude, the guy doing IBC is going to run away from that other guy.
Yeah.
Financially, going to run away.
It's like the old tortoise and the hare book you read as a kid.
Yeah.
The hare starts off in a sprint and the tortoise is just going. But who wins the race?
Right.
Yeah. So, yeah. Well, let's talk risk. One thing in the current financial world, really, we're always the ones taking the risk. You put money into a qualified plan, which, hey, luckily for some professions like pilots, a company throws money in there for them, just without them having to contribute a dime. Like, hey, take it. Why would you not? Like, that's great. And then do the best you can with it.
Right.
Yeah. But if you can add another piece to, another layer to your portfolio that's going to eliminate risk, create guarantees and certainty in your financial future, and create a tax-free retirement income when you get to that point. So not every dollar that you have coming in income is taxable. Like, how would that look? Would that be enough to interest you into discovering more? Let's eliminate risk. Let's eliminate the risk of taxes. Okay, you can't eliminate the risk. You're going to have tax obligations because you have qualified funds. They're going to pay you out. You have Social Security. That's taxable.
Yep.
But let's mitigate the risk. Just like flying, you can't eliminate the risk of the weather, but you can mitigate it by maybe flying around, flying a different path, or flying at a different altitude to limit the turbulence. Right? How many times you don't know it when you're sitting in the passenger seat, in coach or, first class where Paul flies. But pilots are always searching for a better altitude. Hey, it's a little choppy here at 330. Let's go up to 350. and see if it's clear, and they talk to other pilots who are ahead of them and find out, hey, where's the smooth air? What altitude should I be at, where you are, so I can get up there and eliminate this turbulence. That's the kind of flexibility you have when you're at the controls of the jet. That's the kind of things you get when you're at the controls of your financial picture too. Your financial environment is you can make those changes. You can mitigate risk, and you can be in control and change your environment at will. That's really what IBC offers you. So, eliminate or mitigate risk and maximize control. That's what I like.
Yeah, no, I love it. It's a great point. And I think pilots too, you're always thinking ahead as a pilot. I remember in flight school, we were flying single engine helicopters, right? And, occasionally, the engine would snuff out. So you were always kind of, you're at 1,000 AGL or less, and you're always kind of looking for a place to auto rotate, right?
Right.
And luckily those aircraft, they auto rotated very well. The Apache drops like a brick. I mean, you're falling out of the sky. Anyway, yeah, but no, great, excellent point. Yeah, can't say any better. I got nothing to add.
Yeah, well, I mean, if it wasn't for the fact that the pilots manage risk, and that's what they get paid to do, a monkey could fly the jet, right? That's just kind of like a common, phrase. A monkey could fly this thing. Not really, because they can't manage risk like you can. That's what you get paid for. What I think the difference is, most people, the average person, I don't like to say average, the typical American doesn't think that that there's anything they can do to eliminate or mitigate risk if they want their money to work for them. Right? Because we're taught, what's the old adage that we're taught?
If you want high reward, you got to take high risks.
Yep. Big risk for big return, right? No, that's not the case. No, not at all. That's what they want you to believe. But do those same people actually take big risks themselves? No, they don't. Of course not.
No. And this is somewhat, if you read any of Barry Dyke's books, you realize what the institutions that are taking your money are doing with it. Well, they're buying a lot of life insurance type products with a lot of that capital, so it serves as their tier 1 capital. Some of their tier 1 capital anyway.
Yeah.
But you mentioned also, Dave, is and I guess the point I was going to make about thinking ahead and kind of thinking long range. Pilots are always thinking about what's next. All right, I got to get the approach plate out for this airport, or I'm going to have to change the radio to approach control at in Dallas or center.
Where's my divert field if something goes wrong right now? Where am I going?
Exactly.
Yeah.
Is that later in life, we've talked about in other episodes of sequence of return risk, right? Properly capitalized people using dividend-paying whole life in the process of IBC are addressing that sequence of return risk in the future's unknown, so that if their other portfolio is kind of taking a hit, right, and they can't use their drawdown plan or withdrawal plan of those tax qualified monies, they have this that they can rely on, and it's a tax-free bucket, right? Because we don't want to put all of our money in one taxable bucket. Right, we want to have other money, and I know how we think about it, but we want to have as much money as we can in this tax-free bucket. That's going to be guaranteed to be there for us later in life. So it addresses that future risk as well, because it's going to be there.
Yeah,
and it's the rates, So
right, and planning ahead. So most people, their plan to plan for retirement, if we're talking planning ahead, is the company's putting away money for me. Great, I'll be set. Now I can just kind of live my life with the money I have. Well, let's plan ahead and think a little further. Most people don't realize that as soon as you retire, which you only need one thing to retire, income. As soon as you retire, every dollar that you receive in income is taxable. Unless you have maybe a Roth IRA, which you can only fund a little bit. Some people do a backdoor Roth and fund a lot, but then they're paying the taxes early anyway. That's one tax-free bucket. And the other tax-free bucket is properly designed whole life insurance. The difference is that you get to access that cash in a properly designed whole life insurance policy today. Like right now, for whatever you want, whether it's emergencies or opportunities, right? And you'll be surprised how many opportunities there will be once you have access to that capital, because it's not all locked away for some, date in the future when you can finally touch it without penalty.
No, that's a excellent point. And folks, it's not really opportunities that you're going to get through us necessarily, right? It's opportunities that you're just going to start to see yourself that have been there in front of you the whole time. And Dave and I experienced this ourselves, throughout the last, several years, where once you start parking money where you can get at it, things and again, we've said this before, you just look at the world differently.
Yeah.
And now you're looking, what else can I do to better my position so that I can live the life that I want? Right. And that's tough to explain. It's not unless you're doing it, but I'm telling you, we have had so many client testimonials. We need to get some people on here to talk about these things just things that they have done. And it's not stuff we led them to. It's stuff they came across on their own. Business opportunities, quitting their W-2 job and creating their own business. We have all those examples just because people started to think differently and put their money in a place where they could get to it.
Yep. I had one Air Force pilot client who we did an episode about this, but it was, probably 50, 60 episodes ago, where he had the opportunity to prepay his kids' annual private school tuition.
Right. That's right.
And by doing that, he created a massive savings. It was like it
was a pretty good discount.
It was like a 20% savings.
Yeah.
But if you flip the numbers around and look at it as from the perspective of a return on investment, it was more like a 33% ROI.
That's right. I remember that.
It was like he would have had to put that same amount of money somewhere and got 33% on that money to equal the exact same thing he just did with that money by prepaying it. And now instead of paying the school that money every month, he just repays his own policy.
No, I love it.
And it would, but he never would have had. People are like, well, I could have done that, by just having money in a savings account. But the difference is you probably wouldn't have, because I don't think most people who aren't thinking like a banker would even see that as an opportunity to get, to maximize the productivity of every dollar they have. No question. You have to be controlling the environment in which you're flying. If you're just along for the ride, sitting in coach, or I don't fly first class. I think I have once. It was like a $50 upgrade, and Yeah, I got to deadhead once in first class.
Yeah.
And
it's quite a bit more expensive. We started looking. I was
way
like,
more expensive.
I was like, whatever. But if you're not controlling that environment in which you're flying, you're just along for the ride. You don't care what's going on. You're just you're like, all right, those guys know what they're doing. Yeah, you have no say, you have no control, and those guys know what they're doing. They'll be fine. They'll hit that ILS perfectly, or whatever.
Yeah. Try being a passenger and telling a flight attendant, "Hey, can you send a message to the pilot up there and tell him I think we'd get a little better air, a little better ride if we climbed about 2,000 or 3,000 feet, or maybe we could cut the corner right here and save some time." Yeah, they're not going to pass that message because they're in control, not you.
Yep. No, that's right. And
but
that's
when you're in control, you can make those decisions.
Yep. And that's how the majority of Americans find themselves. But they don't even know this is a possibility, Dave, do they? They don't know that there's an asset class that they can capitalize, they can control, they can be liquid. Most people are thinking about this as, yep, there's some startup costs, but they think they can't have whole life insurance and access to their money at the same time. And it's a darn shame what has been done to the American public when it comes to this product, right? It's a great product.
Yeah.
We put all of our money there, and continue to do so, right? So I can control that environment in which I'm flying in.
Well, think of it, you can think of it this way too. Probably everybody listening, maybe they're not a pilot, but they've probably flown on an airplane.
Sure.
So when you're on an airplane, what do? Are you constantly analyzing the flight path, looking out the window, making sure the airplane's not going to hit anything in the sky? No, most likely you're relaxing. You're reading a book. You're watching a movie. You're listening to music. You're taking a nap. The reason you can do that is because the people at the controls have the training, and the experience, and the know-how to get you from point A to point B safely. So I kind of compare. I kind of compare this to like these life insurance companies. Like I can be a passenger in an airplane. Imagine that airplane is like my capital, right? My capital is sitting over here in a life insurance company. I can sit and coach and just be completely comfortable, watch a movie, take a nap, read a book, whatever I want, because I know who's in the cockpit. Well, these insurance companies that have been at this for over 100 years with a 100% perfect safety record, mind you, no rough landings whatsoever, ever in their entire history, because they paid out a dividend. They've been successful every single year after year after year for over 100 years. I know they're going to get me to my destination safely, so I don't have to worry about my capital when it's there. So it gives me the peace of mind. So,
yep. Now, and I've talked about this with folks too, is that, we've talked about it. It's a great place to be. It's a different way to live. It's a stress-free way to live. I used to sock money away in my 401k or whatever, and that was fine. I thought that was the greatest thing since sliced bread, and I was proud of it. I was screaming it from the mountaintops. But that's fine, and I'm glad I did it. But once I discovered this, I was like, oh, I got to put capital here too, because I do have that 100-year history of success, uninterrupted success, and now I'm controlling the environment even more, and eventually I'm going to own the plane. I'm going to own the environment, which is kind of like the final destination. That's like not the arrival syndrome necessarily, but when I don't have to go down to the bank for a mortgage.
Yeah.
That's going to be a great moment in my family's life.
Yeah, it will. And it'll be the first of many moments in your family's life, because if you can do that, your kids will never have to go to the bank for a mortgage. They could come to Bank Fugere and borrow against the bank there and do that and not be tied, to that industry and, taking all the risk along with it. So yeah, that's so many analogies we can make here, but really comes down to risk management. So safety. My cash is safe. My capital is safe. No matter what happens in this environment, I know that's getting to the destination safely. And guess what? I get to use it in the meantime.
It's so boring.
It's so boring.
But think about your flight. You want it to be.
It's like it's a boring flight from like Wichita Falls, Texas to Nebraska to Lincoln, Nebraska. Like that's a boring flight, man.
Yeah.
You ever flown over Kansas? Like it's boring. I'm from Kansas, so I can say this. It's
lots
boring.
Of fields.
Yeah. But it's consistent, safe. You get to where you want to go. So
I'll take that every time.
Yeah, absolutely.
Every time.
Yeah, man. So, all right. I think we cover some good stuff. Again, get into chapter 4 of Becoming Your Own Banker, the problem. Because what does Nelson say? If you don't know the problem,
you ain't gonna know the solution.
Yep. And it won't matter even if it's presented to you on a golden platter.
Yep.
Yeah.
You're never gonna see it.
Yeah, exactly. Kind of like opportunities.
Start with the problem.
Yeah.
Yep. Start with the problem.
Yep. So cool. Well, I like it, man. Now I got the urge to go fly. I think I'm actually flying to Colorado next month, going back for my 20-year college reunion.
Yeah, man. Cool.
Yeah.
That'll be fun. Super
It'll be a lot of fun. In fact, I'm going to get to see Boyd while I'm out there, have breakfast with him. But
awesome.
I get to go back to the prep school. So I started at the prep school. So I got 5 years back there.
Yeah.
So I go back there for a prep school reunion. And then,
cool.
then we have a bunch of different events planned that I'm really looking forward to. So see some old friends.
Yeah, we did our 20th last year. That's why I missed the hunting trip. And, it was a great time. It's just, like you guys, our years we've been at war our whole career, right?
Yeah.
It was just nice to kind of be out of it and, see folks that you knew as teenagers, right? That, are now older men, not old men, but
or now, lieutenant colonels and maybe even some colonel selects.
Yeah, we've got some colonels in my, all the Air Force guys, you guys are like majors for like 3 days, lieutenant colonels for 8 days, and then you pin colonel at like, age 30.
We just happen to be very productive and efficient. So that's what we do.
I guess.
Yeah. I get as much done in 3 hours as an Army guy gets done in 15. Yeah.
Oh, that's good.
No, Paul, you're probably one of the most productive people I've ever met in my life, actually. So you're the exception.
Well, I do what I can.
Yeah.
Well, even at 50%, I'm still twice the normal man.
Keep telling yourself that, pal. And until next time.
Control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.